Hi everyone. So this is the analysis of Nifty for the date 12th of August, Tuesday, and it was quite a remarkable day. And I have simplified the analysis for all of you. So let's start. So this is the 15-minute frame, and the one thing I want you all to notice is the global sentiment. How will you identify that? Just look at the way the market has plunged down, and this is the direction it has taken. So it kept falling from 24,950. It went down, went down, went down, went down. So the direction was the downward side. Okay, let's look at the analysis now. So the global sentiment is downwards, and so this red candle here, this marks the continuation order block because the market is falling down, and this particular candle, this marked the continuation block. Okay, yeah. So the plan was, if I just hide the today's candles, so the plan was that if the market somehow reaches this continuation block and a cemented or an engulfing entry is formed, then I will be looking for shorts. And if this market firstly goes down and looks for cemented on the upper side, I will be looking for longs. Simple. So this is exactly what happened. Market opened, went up, took a resistance from the continuation block, and I got a engulfing entry on a smaller time frame. So let's go to smaller time frame now. So this is the market. It opened at around 9:15, and this was the move for the first half of the day. Small scalping trades can be performed here. When this something like this happened, a range is formed and a big candle engulfs all the range. So this marks the continuation block for the upward side, and the trade can be taken for from here to whatever you can take. You can take it up to here 50 points. Okay, but the major, as per the plan, the major direction that I was looking for is the shorts. So the market went up, took a resistance from the continuation block here, this purple box, and something like this happened. It fell down, went up, and took a engulfing from the zone. Okay, so this was my entry. Market came down, went up, and faced a engulfing here, this red candle. So I entered here and held on to it. It was a nice move of yeah, I exited here at this candle, 10:35 candle. So yeah, my exit was around 68 to 70 points. So this was the plan for today, and initially the stop loss was a little bit higher of 27 points, but I trailed it down to then 18-19 points, and it gave me a nice 1:4 move. Yeah, that's it. And yeah, similar setup for every day. You have to form the bias for the day, and then wait for the price to reach your levels, and take a engulfing entry over there. Cool. There's no change at all. Every day it's the same setup, and you just have to identify the levels. Similarly, if you see, this was the day low for the day, and if I extend this block here, so this engulfing also marked an entry, but it was not the perfect one, because when you will enter here, it this part just will take your SL, and it's 37 points SL, so not feasible. There is also one concept. If you see, this block right here, this marked the internal continuation block. Okay, and you see the price just went up and gave a final move, and this part, this actually is a trap. It's a liquidity sweep. We call this liquidity sweep because the price went up and immediately came down. So it was a trap, and all the people who have gone long here are forced to exit their positions. So this is one of the most probable setups. Wherever you see, if you will mark the levels, and you see a price suddenly moving up and then immediately coming down, then it's a liquidity sweep setup. See right here, it's a gap down. Let me tell you a perfect one. Where is it? This was perfectly followed. Yeah, here also this particular block, this marked the some sort of resistance, and the price tested it, shot up a bit and immediately came down. So here also some sort of liquidity sweep happened, and you will see from that point it gave a nice 90 points move. 90 points. So yep, that's how big players just play with the liquidity. Well, what is liquidity? So liquidity is just is the level or zone where maximum number of orders are pending to be executed. So the big players just push the price up to that level and immediately reverse it, triggering an avalanche of orders to be executed, which reverses the trend for that time period. Okay, so yeah, that's how you play in the markets, and that's how you keep track of whatever is happening and make sense of whatever is happening. So yeah, that's it for the day. Good luck, keep learning. Bye bye.